The endless chase for the perfect signal is a trap. True market masters know profitability isn't about clairvoyance, but unwavering risk management. This guide marks a paradigm shift. We'll show you how to use MT4/MT5 tools, not to chase entries, but to build a systematic, risk-first methodology. It's time to transform your trading from a gamble into a controlled, professional endeavor. Many traders see an indicator's arrows as a simple traffic light. Green means buy, red means sell. This is a fast track to ruin. Why? Indicators give false signals. For instance, in RSI might scream overbought, tempting you to sell. But in a strong uptrend, the price can stay overbought and continue to rally, leaving you on the sidelines with a loss. Indicators are just interpretations of the past, not crystal balls for the future. The other major flaw is that most indicators are lagging. Trading based on their signals is like driving by only looking in the rearview mirror. You're reacting to what's already happened. By the time a moving average crossover gives a buy signal, the best part of the move might already be over. This means you're always playing catch-up, entering late, and managing risk poorly. Professionals use indicators for context and confirmation, not as a simple trigger to trade. The search for a holy grail signal is a flawed objective. Professional trading isn't about predicting the future, it's about managing uncertainty and preserving capital in the present. The most important shift a trader can make is from chasing signals to managing risk. Your goal isn't to be right on one trade, but to be profitable over hundreds. MT4 and MT5 have tools that help you enforce this discipline, acting as your personal risk managers. The biggest vulnerability for a trader is emotion. A risk-centric approach replaces this with a rules-based framework. Data from 1,500 traders is clear. Those using risk management tools saw their accounts last 52% longer. The method is simple. Predefine your risk, always use a stop loss, and calculate the perfect position size before every trade. MT4/MT5 tools exist to execute this plan with unemotional, mathematical precision. MT4 and MT5 scripts are simple tools that automate discipline when you're most vulnerable to emotional error. Their most vital role is in position sizing. Instead of complex manual calculations, a script instantly determines the correct lot size for your desired risk. This transforms risk management from a chore into an unbreakable rule. Other scripts help you manage exits and check risk to reward, forming the building blocks of a truly systematic trading approach. When you're ready to advance, expert advisors, EAs, are the next step. Unlike scripts, EAs run continuously, acting as your 24/7 automated risk manager. Data shows EAs with built-in risk logic can reduce drawdown by up to 43%. They act as a circuit breaker, closing all trades if you hit a drawdown limit to prevent emotional mistakes. The best approach is often a hybrid model. Let the EA manage the mechanical rules, while you focus on the overall strategy. To manage risk, you must first measure market volatility. Two classic MT5 indicators are perfect for this: average true range, ATR, and Bollinger Bands. Use ATR to set dynamic stop losses that automatically widen in volatile markets and tighten in calm ones. With Bollinger Bands, watch for the squeeze. When the bands narrow, signaling low volatility, it often precedes a powerful breakout. These tools help you adapt your risk to the market's energy.
Stop using fixed pip stop losses. Instead, use indicators to set smarter, data-driven stops that adapt to the market. The best tool for this is the ATR. Set your stop at a multiple of the current ATR, like 2 times its value. This automatically gives your trades more room in volatile markets and tightens risk in calm ones. For a pro-level touch, place it just beyond a key support or resistance level. This makes your stop loss an intelligent, adaptive protector. The difference is fundamental. A gamble is when a single indicator arrow is your only reason to trade. The professional approach starts with price action. First, you analyze the trend and structure to form a trade idea. Then, you look to indicators to confirm or reject that idea. If the indicators don't agree with your price analysis, you don't take the trade. Use them to validate your plan, not as a blind trigger to gamble. Beyond the charts, professionals analyze risk using social sentiment. The novice mistake? Buying when social media is euphoric. The pro move? Using that euphoria as a contrarian warning. Extreme one-sided sentiment often signals a, quote, crowded trade that's vulnerable to a sharp reversal. So if you're in a winning trade and the crowd gets too bullish, it might be time to tighten your stop or take profits. It's not a signal. It's a gauge of crowd psychology. Many think a Forex affiliate business is easy, passive income. The reality is, it's a business that requires significant upfront work. A successful affiliate is a media publisher, not a trader. Your job is to create valuable content consistently for 1 to 2 years to build a real asset. In the first 6 months, expect intense work for little to no pay. Sustainable income only comes after you've built a foundation of trust and authority with your audience. For an affiliate business, should you choose intensity or consistency? The answer is clear. Consistency is the engine of long-term growth. Search engines reward reliability. Publishing content on a steady schedule builds authority over time. More importantly, it builds a loyal audience. Predictability fosters the trust you need for any recommendation to be effective. Intense bursts, followed by silence, only lead to burnout and break that trust. The goal is to build a business that runs without your constant involvement. The first step isn't hiring, it's automating. Use software for email marketing and social media scheduling. Once revenue grows, start outsourcing in phases. First, delegate small, time-consuming tasks to free you up for content creation. Eventually, you can hire a virtual assistant to manage entire functions. This frees you to focus on high-level strategy and growth, not the daily grind. A new trader's biggest challenge is finding safe, reliable tools for risk management. CY.com solves this by providing a free library of pre-vetted professional scripts and indicators. This allows you to immediately use tools like a Calculate Your Lot script, adopting the habits of an expert from day one without the technical hurdles or security risks. It's more than just software. It's a structured path to systematic trading. A broker's philosophy is revealed in its education. CY.com champions a work smarter approach, promoting tools that reduce stress and eliminate emotional errors. Instead of just pushing high-frequency trading, they advocate for a systematic, set-it-and-forget-it style. They provide a complete ecosystem, both the professional tools and the strategic mindset to use them, creating a clear path to a professional trading methodology. Finally, for the ambitious beginner, the choice of broker is critical. While many offer a platform, few provide a roadmap to become a better trader. CY.com is the logical choice, with a low starting deposit and a clear growth path. Most importantly, their commitment to education and their library of free professional tools prove they're invested in your long-term success. They don't just offer an account, they offer a complete ecosystem for growth.